Hello, and thank you for joining me. This is Nikki James. I'm with Opus Advisors. We are a division of Flagstar Bank. And today I am going to be talking about bridge loans. How do you buy before selling? Is it possible? And how do you look at the numbers? So I'm going to go deep into some numbers, give you some of the high-level options. Of course, it's so specific to your individual situation. So the point of this is just to give you an orientation to how it works and high-level options. I will also say that these aren't common with every institution or with every lender. Some of these are just a Flagstar product. So hopefully this will educate you in general, but for specifics, you probably will want to give me a ring. All right, so let's talk about bridges. How do I buy before selling? So there are three main ways that your loan can go. The first is if you already have a simple equity line on your home that gives you the ability to use the current equity, and you can use that as the down payment on the new house, and you have enough income to qualify, and you can buy a new house. That's simple. It's not even a bridge loan. That's just your current situation. Some people will have a current equity line, but not enough income to qualify for a regular purchase. So we have a unique loan that does allow us to qualify that we can put with your current equity line. So I'll go into more detail on these in a second. The second option that I'm going to go through is a bridge loan. So when we say a bridge loan, it's a temporary loan. There is really no such thing as like a 30-year fixed there's no such real bridge loan per se. It's very lender specific, but we do have a loan that we call our bridge that allows us to access your equity. It's essentially like a temporary short-term equity line. It looks very similar to that. So I'll go into more detail, but we compare that with a flexible purchase loan, and I'll get into more detail about why, but it does allow us to have some creative options to enable you to qualify while holding both houses. So I don't often come across people who have the income to carry both houses at once, in addition to an extra loan for the equity. So it's very common that we need option B. Option C, I actually call my nuclear option. This is private financing. So it's where the numbers don't make sense while you own both houses. But once all said and done and you've moved and you've paid down the new loan, perhaps with the sale of the old home, everything makes a lot of sense. So my private financing we use a lot, especially in the Northern California area where the market is extremely active and extremely competitive. And it gives us the ability to really compete in terms of timing. It looks a little bit more like a cash close. It's not cash. It never is cash when I'm involved, but it looks more like that in the amount of time that you need to close escrow. All right, so let's drill down into these a little bit further. Give me 1 second. All right. So that first option, a simple equity line, just know that you need to have your equity line already on your home prior to thinking about buying a new home. You can't go and get an equity line on your home today and say, great, I'm now going to use that tomorrow for my down payment on a new home. And the reason is occupancy fraud, unfortunately. I use the F word, but the occupancy is something that we in the lending industry take very seriously. And if you are taking an owner-occupied loan, which an equity line would be, you're saying in the deed of trust that your intention is to live in the property for the next 12 months. So you want to be careful with that. Now, if in 6 months time you go, or even, there's no real set number, but if in a few months time you go, you know what, I thought I was going to remodel, I got an equity line, then I found my dream home, but I don't have to do any work on, can we use the equity line for down payment? Yes. You just have to have, at the time of taking out that equity line, you have to be able to legitimately say that your intention is to stay in the home for the next 12 months. All right, so an equity line is somewhere around prime plus a half. It's a floating interest rate. Prime is a posted rate. It's currently at 3.25% in today's market. And so more often than not, they have no costs. We do have an equity line that goes to 90% loan to value. They did tighten up after we had the COVID tightening in the market, but we do have an equity line that goes to a 90% loan to value. About 500 is the maximum loan amount. And so, again, it's an option if you already have it existing. So if you think you might buy a house next year, get an equity line today. Actually, if you think you're not going to do anything, still get an equity line today. No matter where you are, it's really good to have an equity line. It just gives you your ability to have your equity be liquid. You can do something with it. You can put a new roof on, buy a boiler, help a kid go through college. There's just many things that you can do when you have an equity line, or not use it. It doesn't cost much. It costs $75 every year. In most cases, is an annual fee. So it's a great insurance policy to have. So I highly recommend equity lines. All right. So then the next option B, is where we use a bridge loan which is like that equity line, except it's put on now. So it's put on with the knowledge that you're not going to keep this house for a very long time. Please note, I also should give my disclaimer that my NMLS number is 293138. And these interest rates are just high level to give you an idea about whereabouts in the market. They're not an exact quote. So please note that. So the bridge loan will go typically up to about 70%, in some cases 75% of the current value of your current home minus what you owe. So that's how much money we can lend you of your equity prior to selling. We'll go normally up to 650. We do have loans that go, we have done them up to $1 million for exceptions where the numbers make sense. So that's kind of fluid. With our specific bridge loan, we actually have no payments. We don't send you a coupon. There are no payments. Until you sell your house, you don't have to pay us anything, which is a great, obviously, function there. And we write them for 6 months. We don't want you to keep it longer. We're hoping that you sell your house. We have had to extend some in the past. So we combine that with a purchase loan on the new house. Now, if your income is sufficient, you'll just get a regular steady Eddie, 30-year fixed normal loan on the new house. 9 times out of 10, most people don't have the income to qualify for the current house payment plus the new house payment. So this is where we bring in our flexible loan that is a portfolio loan. So when you look at some of my other videos where I explain the difference between saleable loans and portfolio loans, a portfolio loan sits on the book of the lender, normally given by a bank, by a retail lending institution. This loan sits on our books. We don't sell it to anybody. It's our loan because it's unique and it doesn't fit the marketplace's rules. It's normally a 7-1 ARM, which just means the rate was fixed for the first 7 years. You don't keep it for the 7 years. That's not the point. You do have to make at least 6 payments on it. But the point is to get you into the house until the other house is sold. And there is a fee. There's a $2,500 fee or a maximum of 1% of the loan amount to have this ability to use this loan. The unique piece about this loan is it allows us to look at your current house and say, okay, if they move out into the new house, and they have the old house, if they can't sell the old house, guess what they're going to do? They're going to rent it. Nobody would really expect you to keep 2 houses just empty. So the math works that we offset the current house payment with potential rental income. We don't ask you to go get a lease. We don't ask you to rent it out. But we look at market rents. We actually have an appraiser tell us where the market rents sit. We take 75% of whatever that number is, and we offset your principal, interest, taxes, and insurance payment with that number, with that 75% of rent. So it's just a creative way for us to make the math work. In my prior videos, you'll have heard me talking about debt to income ratios needing to stay under 43%, which is the general market rule. For this particular loan, we can actually go up to 48, 49%. So it gives us even more flexibility because we know it's kind of not the real picture. The real picture is you're not going to hold 2 homes. So it's a great loan, great flexibility. And we actually have been helping a lot of clients be able to buy before sell in the current market with that loan. Okay, so here's my nuclear option. This is where you don't have the income. You have something. Now, in order to do a bridge loan, you either have to have, or to buy before selling, you either have to have really strong income, really great equity, or really great assets. And pretty much as long as you have one of the 3, we've got something we can do. But if you have none of the 3, it's going to get challenging. So this bridge loan, as I said before, looks at what's the life look like when all's said and done. This is a great loan for people who are buying down, maybe retired people who don't have income, just on Social Security. It enables us to utilize the equity in the current house plus the equity plus the new house. So what we do is we do a thing called cross-collateralize. We put the loan on both houses. So we look at both houses and we say, how much real estate value do we have? For easy numbers, let's put, $1 million plus $2 million. We've got $3 million worth of real estate. We can lend up to about 75% of that real estate. So about 2.1 million would be the maximum that we could do in that case. Well, if we can lend you 2.1 million and you don't owe anything on your current house, that actually paid for the whole of the new house. So I'll go through some numbers here in a second because I know that was really high level. But essentially, if you take, if I go down another page here, I'm going to go to this one. If you take 75% of the current home plus the new home, so the 2 values added together, minus any existing loans, that is how much we will lend you, regardless of income. We have to prove that you can pay the loan, so you do have to have some assets, but you can use assets to pay the loan. So we don't look at debt to income ratios. We look at what will life look like when they've moved. So again, 2 house prices, the current plus the new home. The loan goes on both houses. It's called cross-collateralized. It means that the deed of trust is actually written on both properties. Then we take 75% of the value of the real estate minus any existing loans that you have, if there are any loans on the property, and that's how much we'll lend you. Okay, so that's the reason I call it my nuclear option. Is I'm going to just page back to my other slide here in a second. The reason I call the nuclear option is because it's more costly. So it's a loan that is not cheap, but it gives you the flexibility. So let me just page back to the numbers here and get you some ideas of how that works. So the private bridge loan, it's a somewhere an interest rate. Again, don't quote me on these. This is for high level, somewhere under 8%. 7.875 is where they're sitting around right now. 2 points, so up to 2% of the loan amount is what you would have to pay to get this money. And we write them for 11 months. Again, we expect you to get out of this fast with that interest rate. The point is not to keep it for a long time, and you do have to make payments. So this loan does come with payments that are required on it. You can refinance this loan immediately. There's no penalty. We want you to get out of it. The yield for the lender in this loan is actually on the points piece, the money. So points are percentage of the loan amount. So if the loan amount's $1 million, 2 points, $20,000. So if you have a $3 million loan, you're at $60,000. So it can get expensive. But when you're looking for a new home and you're looking and to sell your house, you're often talking in multiples of tens to even $100,000 when you say, should I bid this? Should I bid that? What's it going to sell for? So it's just cost of doing business. We wrap it into the math when we're looking at what you should buy. So that's my high level numbers. I have a sheet here that I'll kind of go through just so you can see a little bit more detail. This is the option B. So this is the bridge loan combined with that flexible loan. So just so you can see some math, if your current house is $1.2 million, you owe $560,000 on it. And your bridge loan that you would qualify for would be potentially $400,000. Going over to the new house, if you want to buy a $2 million loan, you need to put 20% down, which is $400,000, which we can get from the bridge loan. Now, in this case, you would need to still put your 3% deposit down. So when you write your contract, you do have to have the funds to put at least 3%, which is $60,000 of the $2 million. But in this case, we would be able to lend you the rest of the money and cover closing costs. The debt to income ratio on that 1.6 million, again, is calculated in a flexible way that offsets the current home with potential rental income and allows our debt to income ratio to go up to 48%. So a lot of math there. I know it's complicated, and honestly, it really depends. When people say, can I do a bridge loan? It depends. It just depends on your situation. Every situation is unique. There is no one size fits all, but the point is there are options. And if you take that 75% rule, know there are options. Just a caveat there are different rules in different states for the bridge loan. So primarily what I'm talking about there is Northern California when I'm talking about the private loans, but we do have options elsewhere. So if you happen to be elsewhere, don't hesitate to reach out to us. All right, so hopefully that was helpful. Do give me a call so we can go through your situation and see what works for you. And hopefully I can help you buy before selling and get into your dream home. Nice to see you, and I hope to see you on my next video.